of 20 variations, right? So would be decrease or reduction, right? Decrease or reduction of what? Going in there. Oops.
Why is it 12 in there?
Isn't it 10?
Huh?
It would be
That's
10.
12 million on the question and 24 million over there on the board.
I think the answer is 10.
Did I just, I used a different problem. Okay, let's see. This should be, this is a typo. Okay, alright. Change it, so let me change my answer. This would be,
What?
I had another question. What? What was the question? Yes.
Just for consistency, could we change marker to smart?
Oh, okay. Thank you. Yeah, I was copying and pasting up different. So is this Spartan? Thank you. Yeah. Okay. Let me change my answer to be Spartan. Okay. All right. Okay. All right. Number 28. In the computation of basic EPS, what would be the numerator? 123 million, right? Yeah? So then I could also ask, in the calculation of basic EPS, what would be the denominator? 201, right? So same as the weighted average. So then what is, last one, what is basic EPS? Okay, all right? So again, going through the process, but then converting it into a multiple choice type question. Okay? Question. All right? Okay. Any other questions? No? Okay. If we have time, I'll go over the diluted EPS, but this is the same exact problem we did in class, all right? So if we have time, I'll go back and go through that, but it's already 11:10. So I do have the answers posted. Okay, so. Okay, so here, all right, so this is the same problem we went over in class. Okay. So then you can just take the answer key and then just fill in the blank, right? So what is basic EPS? When calculating diluted EPS, assume exercise of the options with increased weighted average common shares outstanding. Right, so again, looking here, so all of these questions then would be what? So you calculate what is basic EPS. Second question is exercise size of the option, so what would be the incremental shares here, right? Next one, what would be the incremental shares for the convertible preferred stock, incremental shares for the convertible bonds, for the contingent shares, right? Right, so then what is the numerator, right? So again, you know all that. So what is the numerator? What is the denominator? And then what is diluted? Right? So again, just taking you step by step, right? And again, this is a lot of questions, so I'm just giving you, you're not going to be asked all of these questions because there's too many questions, right? So again, just some examples of types of questions you could be asked, all right? But of course, for sure, you'll be asked these three because you have to calculate the diluted, right? You're not going to get away without calculating. Okay. Okay, moving on. Getting into chapter 21. Alright, so again, keep in mind, the chapter 21, alright. Okay. So statement of cash flows, again, remember, the only thing that shows up on statement of cash flows is if it affects cash, right? It has to be cash coming in or cash going out, right? And so a lot of you came by my office and asked, well, I'm having a hard time distinguishing, well, should it be investing or finance, right? So remember, if it affects long-term assets, right? These would be then investing activity, or we'll just call it investing, okay? So it would be investing. Long-term liabilities and stockholders' equity, this would be financing, okay? All right. Okay, so let's take a look at these questions. Okay, so it says here, which of the following is reported as an operating activity, right? So then, sale of common stock, what? That affects stockholders' equity, so this would be financing, correct? Sale of land, that's investing, right? Merchandise sales, so again, day-to-day operations is affected by, like, operations, right? So that would be operating, right? So this is operating. And then what is payment of cash dividend? That's financing, right? So your answer here is what? C, yeah? Okay. All right. Which of the following is investing? Okay, so again, this is what? Sale of funds, this is financing, this is investing, this is operating, this is financing, right? So then investing would be sale of land, right? Okay. Okay, which of these is a financing activity? Right? Again, this is investing, this is operating. How about payment of semi-annual interest on bonds payable? Ah, good, because what? It has to do with interest expense, right? So that's operating. Okay? Okay, all right. Okay, so these next two questions are asking for what is net cash flow from investing activities, what is net cash flow from financing? Right, okay. All right, so let's go through the first one. Gain on sale of equipment, where would that show up? Operating, right? Proceeds from the sale of equipment. That's investing, right? Because proceeds means you're getting cash, right? So that's cash coming in. Purchase of AS Inc. bonds. Okay, so if you purchase somebody else's bonds, it is what? It's an investment, right? So that would be investing. Okay? Amortization of bond discount. That's part of operating. Okay. Dividend declared. Dividend declared was, did we pay any cash? No, we just declared it, right? So does it involve any cash? It's non-cash, NC, right? Dividends paid. That's cash, that involves cash, right? So that would be financing, all right? Proceeds from sale of treasury stock. Where does treasury stock show up? Part of stockholders' equity, right? So this would be financing, right? So then we want to calculate so investing activities then would be what? The 10,000 minus the 180 gives you what? 170, yes? And then your financing would be what? 38,000 and 75, so that gives you what? 37. This would be 170. All right. Questions? Any questions? Okay. Okay, so what are we trying to get here? What was the amount of cash paid for taxes, right? Yeah? So we have what? We have income tax expense of 10 million. Income tax payable increased by 3 million. and then the deferred tax liability decreased by 2 million, right? Okay. So here we go. So what is, we have income tax expense of what? 10 million, right? And we want to get what? Cash paid, right? So this is the number we want, right? Okay, so what happened to income tax payable? Went up. So payable went up, so is that a debit or credit? Credit. Credit, right? Income tax payable, credit, 3 million, right? What happened to our deferred tax liability? That went down, so that was the debt, right? So DTL, 2 million, right? So then what is your cash pay? 9 million.
Can you explain the DTL part? I thought it was the other way around.
No, DTL is a deferred tax liability, right?
Right, so it's,
So,
okay.
yeah, liability.
Decrease, okay.
Next. Bond interest expense was 10 million for the year. During the year, bond interest payable decreased by 2 million. What was the amount paid for interest, right? So here, what are we trying to get? Cash paid for interest, right? So we have here bond interest expense, 10 million. We want to know what is the cash paid. Right, so this number here. What happened to bond interest payable? It decreased. So that's a debit or a credit? Debit, right? So we debit bond interest payable decreased by 2 million. So what is our cash pay? Well, all right, let me ask you a question. What other things would affect cash interest paid? If we have what? If we have a bond premium or a bond discount, right? Yeah. So we have to look at, if we have a bond premium or a discount, then, so bond premium, what kind of balance would this be? This is a credit balance, right? Discount would be a debit balance, right? So then if, the only reason you would have the bond premium or discount in here would be for the amortization amount, correct? And so the amortization amount would be decreasing these items, correct? So if you had a bond premium, then you would have to what? Would be bond premium amortization, right? If you had a bond discount, then you would have here bond discount amortization, right? Okay. Because remember, the bond premium when you're amortizing is going down, has a credit balance. So if it's going down, it's going down, right? So it's a debit. If you have a bond discount, it's being amortized, as a debit balance, it's going down, so you have to credit it, right? Yes? Okay. All right, next one. All right. All right, so it says here, you want to get what? Cash collected from customers, right? So here, sales revenue was 100 million. Accounts receivable decreased by 5 million, right? So what is cash collected? All right, so here. So this one is debit to cash, right? Because you want cash received, right? You want this number here. Okay. So how much was sales? Sales, remember, is a credit. So we have sales of 100 million. And then what happened to AR? Decrease, so that's a credit, right? Credit AR 5 million. So then cash received is 100, right? All right. What if we wanted cash paid for inventory or suppliers? Okay, suppliers of your inventory. What would be the accounts we have to look at?
Cost of goods sold.
Cost of goods sold. What else?
Inventory.
Huh? Accounts payable. What else?
Inventory.
Very good, inventory, right? Okay? Alright, so don't forget. Questions? Alright. Okay, let's look at this one. So it says here, on January 4, Hall Corporation issued 200 million bonds for 93 million. During the same year, 500,000 of the bond discount was amortized. And the statement of cash flow prepared by the indirect method, what would you have? Would you have a financing activity of 200 million? No, why? Isn't bonds payable? Isn't bonds payable a long-term liability? How much cash did you get? This is the cash, right? This is the cash. So this would be a financing activity of 193 million, right? Okay, not 200. So this would be financing, right? So for this to be correct, this would be what? Have to be 193 million, right? So that's why this is wrong, right? How about, since we know it's financing, it can't be this one, right? Okay, so now we have a discount amortization under the direct method. So it's 50-50. Do we add it or subtract it from net income? Flip a coin, right? What did you do? You add it, right? Okay. Questions? Any questions? So again, this is how you have to be able to decipher the pieces of information that you're given, right? Okay?
Why do you add it?
Because what did you do? You issued the bond, right? You issued the bond, so you got cash and you have a bond payable, right? So you received cash, so it would be an addition, right? It's cash coming in. Right? So you basically sold the bond, right? You issued the bond, you sold it. Huh? Yes. Yes. Right? Remember, go back to your little cheat sheet. Bond discount amortization is added to net income, correct?
What if it was a premium?
Huh?
What if it was a premium?
Then it would be subtracted.
Okay.
Yes. Yes. The bond premium amortization? Because, yes.
I was just gonna ask, does the indirect versus direct method have any effect on this problem as far as how we amortize?
The direct method isn't used on.
No, I mean, so under the direct method, because there's no cash effect, it wouldn't show up on the direct method, right? Yeah. But again, remember, we just said, under the direct method, you would have to calculate cash paid for interest, right? So that bond discount amortization, or whatever, would have to also be included when you calculate your cash interest paid, right? Right, so, okay, right? Okay, so the question was, what was the question again? Why would it be a non-cash? Because you go back to your notes from chapter 21 here. So this is the indirect method, right? So your non-cash item, your discount amortization, you have a bond discount, you pay less cash, right? But when you have a bond discount, this is what your interest expense is. Here's your discount amortization. This is the only amount of cash that you pay, right? So you only pay cash of $8,000. This is non-cash. Same thing for your premium, right? Your premium amortization, you paid cash of $12,000. This $2,000 is non-cash. Okay? Alright. Okay, yeah. I can't hear Anna. Yes? Yeah, if it was a premium, it would be add. Right? So again, just look here. Right, so here, if it was a discount amortization, you add. If it's a premium amortization, you subtract. Right? So again, if you just remember one, yeah, the other one just the opposite, right? Okay. Questions? Okay, good. Okay. Oh, good. Okay, let's look at number 23. So it's asking what should be from what? Operating activities, right? Okay. And you have net income here of what? 140 million. Let's go through each of these. Okay, amortization of patent. Operating, investment, or financing. Operating, right? Cash dividend paid. Financing. Decrease in accounts payable, accounts receivable. Operating. Decrease in salaries payable. Operating. Depreciation expense. Operating. Increase in long-term notes payable. Financing. Sale of preferred stock for cash. That's part of stockholders' equity, right? Preferred stock is part of stock. So that's fine, right? So then, you just take so you start off with your net income, right? So you have net income of 140 million. Okay. Amortization of patent. Amortization of patent. Remember, any type of amortization expense, depreciation expense, depletion expense, these are all non-cash, right? So we have to add back the non-cash. So we add back the 1 million. All right. Decrease in AR. We add or subtract? Add, right? Because if it's decreasing AR, we're collecting cash, so it's increasing our cash. We add, right? Decrease in salaries payable. Okay, so since this is going down, and since add, right? If this is going down, then this should be a subtraction, right? Yes? Yeah. 1 million. Okay. It's always the opposite. Plus what? Salaries payable is going down. We paid the salaries. We're using our cash, right? So it's a minus. And then we add depreciation expense, because again, it's just like this amortization of patent. It's a non-cash, so we have to add, right? 20 million. So that gives us what? 169. Okay. All right. So there's this one PowerPoint slide for the statement of cash flows. It's going to help you with this.